Hi folks, there has been a period of underperformance in the Indian stock markets from September 2024, and since we are coming off a historical market high and a long bull run, does it feel like we are entering into another lost decade of the stock market? Well, I read an interesting article by the founder of Kuvera, Gaurav, and it had some interesting insights about investor behavior. So in this video, I'm going to break it down for you, share some historical data from the Sensex, and also share how I have prepared my own portfolio for weathering long periods of underperformance. Now, don't get me wrong, I'm not one of those doomsday prophets who says that India is going to go down. India is poised to do well in the medium term at least. We have one of the fastest growing economies. We have a lot of factors in our favor, such as the move away from China, the young population that our country has, strong domestic consumption, and savvy foreign policies which are helping us steer the turbulent times right now. Referring back to the article, the founder of Kuvera says that investors are extremely confident now, and this is making them allocate most of their money to equity and equity related instruments. He goes on to quote Shankaran Naren, the CIO of ICICI Prudential AMC, who recently said that investors today are behaving like the investors of the 1990s, under-diversified and overconfident. So what happened in the 1990s? I took the data from the beginning of the Sensex, that is from 1986 January, and tracked it till 2007. And then I asked a simple question. What if I had invested on Jan 1st of any of these years and held it for 10 years, then what would be my annualized return? Now, in the start of the period from 1986 till 1991, if I'd invested on Jan 1st, I would have got a pretty solid return. The range was between 14% to 23%. But if I'd invested on Jan 1st, 1992 and held it for a decade, then my annualized return would have been just 5% or so. And if it was 1993, and it comes down to 2.9%. So this is the lost decade that was being referred to in the earlier article. So as an investor at that time, you can imagine what they would have been going through. Every time they opened their portfolio, it was not doing well. And every time they looked at the Sensex, it was moving between 2000 and 4000 range. So it would have been a very long period of underperformance for them to go through, and most people would have lost their patience and exited. Things finally started picking up in 2003, and then again the returns were better off. Now the question is that, did investors at that time find it more difficult to stay invested because they did not have access to data, they did not have real-time information, and the stock market would have been more new to people at that time, so they would have just assumed, people lose money in the stock market and given up? Or is it more hard for us because we are always plugged in to real-time information? We have our apps, we have news channels that are giving it to us, we have lots more data, and for the last 5 years we have not seen a period of underperformance. So this is a question to ponder on. Now the big question here is that, as investors, how can we prepare ourselves for flat or poor periods of performance? I believe that we can ride out this period if we can confidently say yes to these 4 questions. Do I have a proper health insurance which will help me to avoid large unplanned medical expenses? Do I have an adequate emergency corpus which will help me to ride out turbulent times like a job loss or a pay cut or a sabbatical? Does my job look stable enough, or the company I'm in or the industry I'm in, is that stable enough for the next few years? Otherwise, I may have to go back to my second question and dip into my emergency corpus. And the 4th question is that, do I plan to make any large expenses, or do I foresee any large expenses like retirement, house purchase, college education, and am I well prepared for this? If your answer is yes to these 4 questions, then you can confidently ride out long periods of underperformance. As for my strategy, I'm sticking to the plan. I've invested in diversified mutual funds largely. I've not invested much in sectoral or thematic funds. I've invested some part of my portfolio in NASDAQ related funds. I've not looked at other regions for diversification because I've not found it attractive enough. I'm not selling, I'm not chasing, I'm in it for the long term. What do you think? Are we headed into a lost decade? Have you ever held on to a stock for a long period of time, and how did you ride out periods of underperformance? Do let us know in the comments. If you have any queries or thoughts, please do drop it in the comments or write into us and we'll be happy to get back to you. Thanks for watching.